Take a look at the markets. All you see is red. It's a tidal wave of negative numbers washing over portfolios, erasing months or even years of gains in the blink of an eye. The headlines are screaming in a chorus of panic and fear: recession, crash, trade war. It feels like the floor just dropped out from under us, a sickening free fall with no bottom in sight. This chaos, this pandemonium in the markets, is all thanks to the new Trump China tariffs. For a lot of people, it's a gut wrenching echo of the recent Liberation Day volatility, and you can feel the fear in the air. But while most investors are panicking, dumping their best assets and running for the hills, a select few are quietly preparing for a massive opportunity. In this video, I'm going to show you why this panic is actually a smokescreen, a setup for a decade of long-term American growth, and I'll tell you exactly where the biggest winners are hiding. Let's not sugarcoat it. The situation right now is brutal. Your phone buzzes with another alert, another nasty drop in your account. You refresh the page, hoping for a bounce, but all you see is more red. It's a feeling of helplessness as forces far beyond your control seem to be dismantling your financial future. This isn't just a minor dip. This is a significant panic-driven sell-off. The catalyst was President Trump's announcement on October 10th. Responding to China's recent export controls on critical rare earth elements, the administration has threatened a staggering 100% tariff on a wide range of Chinese imports, set to kick in on November 1st. Wall Street heard those words and immediately started selling. The Dow, the S&P 500, the Nasdaq, they all tumbled as investors priced in the new reality. This feels terrifyingly familiar because we just went through a shock like this. It brings back memories of the April 2025 Liberation Day scare. Back then, the announcement of new tariffs triggered a sharp global market decline that sent a shiver through the entire system. Investors who lived through that remember the shock, the speed of the drop, and the widespread panic that took over. It felt like a lifetime of disciplined investing was coming undone in a single week. Right now, the financial news networks are in a frenzy. They're replaying the president's statement and showing charts of the VIX, the market's fear gauge, spiking to levels we haven't seen in years. They bring on analyst after analyst to talk about contagion, slowdowns, and the looming threat of recession. The narrative is set. This is a disaster, and there's nowhere to hide. And that pain is real. When you see a major index drop sharply in just a couple of days, as the S&P 500 did after the April announcement, it's not just a number on a screen. For many, that's a down payment, a college fund, or years of retirement savings seemingly vaporized. The emotional toll is immense. The fear of losing more money tomorrow pushes people to sell today, which just creates a self-fulfilling prophecy, driving the market down even further. This is the anatomy of a sell-off, a toxic cocktail of bad news, uncertainty, and pure, unadulterated fear. And right now, we are in the middle of it. The question on everyone's mind is not just how bad will it get, but why is this happening? And is there any way out? To navigate this chaos, we have to understand what's really driving it. This isn't just a random market tantrum. It's a calculated, high-stakes economic war, and what we're seeing is the fallout from a major escalation. The market hates one thing above all else: uncertainty, and these tariffs have injected a massive dose of it into the global economy. First, let's be clear about the chain of events. This new 100% tariff threat didn't come from nowhere. It was a direct tit-for-tat response. China, which processes nearly 90% of the world's rare earth elements, essential for everything from iPhones to F-35 fighter jets, announced it was curbing exports. This was a clear message to the US. We control a vital part of your supply chain, and we can turn off the tap. The Trump administration's tariff threat is the retaliatory strike, a move designed to inflict maximum economic pain. This is what a trade war looks like: a cycle of escalation where each side tries to find and exploit the other's weak points. Second, we need to understand how tariffs actually work, because there's a huge misconception out there. A tariff is a tax, but it's not China that pays this tax. It's paid by the American companies that import the goods, the Walmarts, the Apples, the thousands of small businesses that rely on Chinese parts. That company then has two choices, and both are bad for its stock price. It can absorb the cost, which crushes its profit margins, or it can pass that cost on to you, the consumer, by raising prices. Higher prices mean people buy less, which lowers revenue. Either way, the stock price takes a hit. During the 2018-2019 trade war, some analysts estimated that every 5 percentage point increase in tariffs could reduce S&P 500 earnings by 1–2%. Now, we're talking about a potential 100% tariff. You can do the math. It's frightening. Third, the fear is now bleeding into other parts of the financial system. During the April scare, we saw a classic flight to safety, where panicked investors sold stocks and piled into government bonds. But then something even more worrying started to bubble up. People began to worry about the bond market itself. There were whispers of investors losing confidence in US fiscal policy amid a chaotic trade war. This is the ultimate nightmare scenario for an investor, a world where both stocks and bonds are falling at the same time. That memory is fresh and it's fueling the current sell off as investors fear a repeat performance. Finally, history shows us that this kind of volatility is the new normal, but it also contains a hidden message. Think about what happened earlier in 2025. In April, the Liberation Day tariffs caused a major drop, but just a week later, the administration announced a temporary pause, and the market staged one of its biggest rallies in years. Then, a temporary trade deal was reached, and by summer, the S&P 500 was hitting all-time highs. The lesson here isn't that the market is irrational. The lesson is that it reacts violently to news, both good and bad. It sells off on the threat of tariffs and rallies on the hope of a deal. Right now, everyone is fixated on the threat. They are agitated by the chaos, but they are missing the bigger picture. So, while everyone else is panicking, while the talking heads on TV are predicting doomsday, here's what you should be doing. Look past the immediate chaos. Because what if this crash isn't the real story? What if all this noise is just a smokescreen for one of the biggest economic shifts of our generation? This is the pivot. We have to stop seeing these tariffs as just a short term problem and start seeing them for what they are: a brutal but incredibly effective catalyst for change. The real goal here is to fundamentally rewire global supply chains. For decades, American companies chased cheap labor overseas, mostly to China. It made products cheaper, sure, but it also hollowed out American industry and created a massive strategic vulnerability, one China is now trying to exploit. These tariffs, as painful as they are designed to reverse that. They are forcing a great reshoring, and in that forced transition lies a multi-trillion-dollar opportunity. Let's break down the three distinct layers of this opportunity. First, and most obviously, there's domestic manufacturing. Think about it. If you're a US steel company, your biggest foreign competitor, China, just had its prices artificially jacked up. That's a monumental advantage. Tariffs on steel and aluminum directly shield American producers like Nucor and US Steel from low cost imports, letting them gain market share and invest in expanding production right here at home. The same logic applies to automakers with heavy US operations like Ford and GM. They become instantly more competitive against imported vehicles. So while the market is punishing companies tangled up in China, it's ignoring the domestic players who are about to see their competition kneecapped. This is the most direct way to play this shift. Before I get into my second and maybe even more powerful long term opportunity, just think about this for a second. Does this shift in perspective make sense? If you're getting value from this breakdown and want to stay ahead of these massive market shifts, make sure you hit that subscribe button. We cut through the headline noise to find the real, actionable opportunities every single week. Okay, onto the second layer of this opportunity: the supply chain revolution. This is bigger and more subtle than just made in America. For the last 30 years, the buzzword in business was efficiency. Now it's resilience. The pandemic and this trade war have exposed the huge risk of relying on a single country for critical parts. It's no wonder that in a recent survey, a vast majority of CEOs, over 90%, said they are now considering or have already begun reshoring their operations. This isn't just about moving a factory from Shanghai to Ohio, it's about diversifying. It's a China plus one strategy, with new factories popping up in Mexico, Vietnam, India, and other allied nations. The opportunity here is in the companies that facilitate this revolution. Think about industrial automation companies like Rockwell Automation or Emerson Electric. New factories will be filled with robotics to offset higher labor costs. Think about the logistics companies building new shipping routes and warehouses. This is a massive project that will take years and cost trillions. Companies at the center of this great rewiring are positioned for a decade of sustained growth, totally separate from the day-to-day market drama. Finally, we come to the third and most explosive opportunity: the innovation accelerator. This is where fortunes could be made. The pressure from these tariffs is a powerful incentive to innovate our way out of dependence. Let's go back to rare earth minerals. China has a stranglehold on the supply. The real long-term solution isn't just to find another country to buy from, it's to make their control irrelevant. The opportunity is in American companies developing technologies to recycle these critical minerals, or even better, creating new materials that don't need rare earths at all. This is now a matter of national security, which means these companies are likely to see a fire hose of both private and government funding. This same logic applies to other critical sectors like semiconductors, AI, and biotech. The government wants American made chips, American developed AI, and American produced drugs. Finding the small, innovative companies at the forefront of this tech arms race is the key to capturing the most explosive upside from this entire shift. So, what do you actually do with this information? Seeing the opportunity is one thing, profiting from it is another. First, and this is the most important rule, do not panic sell. History is crystal clear on this. Selling into a fear driven crash is the single best way to lock in permanent losses. The market recovered from the 2018 trade war, and it recovered from the April 2025 scare. Volatility cuts both ways. Staying invested is critical. Second, start building a watch list. Don't just rush out and buy something. Use this chaos to do your research. Start identifying specific companies in the three opportunity zones we just discussed. Domestic manufacturers. Look for established industrial, steel, and US based auto companies. You can also check out ETFs like the Industrial Select Sector SPDR, XLI for broad exposure. Supply chain revolutionaries. Find companies in industrial automation, logistics, and engineering that will power the reshoring trend. Innovation accelerators. Research smaller companies working on rare earth alternatives, domestic semiconductor tech, and biotech. Third, dollar cost average. No one can perfectly time the bottom. The best strategy in a volatile market is to buy in slowly and systematically. If you have a list of high conviction companies, use this downturn to accumulate shares at a discount. Every red day is a chance to lower your average cost. Remember, this is not a get rich quick scheme. This is a thesis about a fundamental tectonic shift in the global economy that will take years to play out. But those who have the courage to act now, while everyone else is blinded by fear, will be the ones who reap the rewards for years to come. The market is reacting to short term chaos, to scary headlines, and to fear. That's what markets do. But the long term story, the one being written just beneath the surface, is one of rebirth. This isn't just another market crash, it's a painful but necessary reset. It's the end of unchecked globalization and the beginning of a new era of American industrial revival. While others see a crash, we see a clearance sale. The future of American industry is being forged in this fire, and for those paying attention, the opportunity is immense. What are you buying in this downturn? Which sectors do you think will benefit most from this great reshoring? Drop your thoughts in the comments below. I read every single one. And if you haven't already, do me a favor and hit that like button and subscribe for more analysis that looks past the headlines. Thanks for watching.